In a rapidly changing technology landscape, market dynamics are shifting as AI enthusiasm cools and hardware competition intensifies. Today, we explore significant stories, including the rise of Raspberry Pi and the return of smart glasses. Here are today's top 10 stories you need to know. The overarching narrative in the technology market is evolving from a focus on singular breakthroughs to a more mature cycle of development. Recent coverage suggests that the excitement surrounding AI is transitioning into a phase where successful companies will be those with clear products and genuine customer demand. This shift indicates a growing scrutiny of AI promises and a renewed interest in practical hardware solutions. For consumers, the silver lining is that the most useful features and innovations are likely to survive this more selective phase. As we move forward, we can expect a technology landscape that prioritizes real-world applications over mere hype, leading to products that genuinely enhance user experiences. The landscape of the consumer internet is undergoing a transformation, moving from a focus on merely increasing user numbers to prioritizing better engagement and monetization strategies. Recent market movements surrounding entertainment and consumer tech companies indicate that investors are favoring those that can effectively convert user attention into sustainable revenue streams. This development has strategic implications for platforms as they are now under pressure to demonstrate that user engagement can result in durable cash flow. For consumers, this shift may lead to an increase in advertisements, more subscription tiers, and more personalized content feeds as companies optimize their offerings for monetization. Looking ahead, the nature of interaction on these platforms could evolve significantly as companies adapt to meet these new demands. The battle for AI value capture is increasingly shifting towards hardware, marking a significant evolution in the tech industry. Recent market commentary emphasizes that companies are competing not only on software models, but also on controlling the hardware layer that supports AI experiences. This hardware focus is critical, as it underpins the capabilities necessary for AI applications to function effectively. Historically, software development has dominated the tech narrative, but the rise of AI has highlighted the importance of robust hardware infrastructure. For consumers, intensified competition in the hardware space can lead to more choices, lower prices, and enhanced performance in devices such as laptops, mini computers, and connected devices. As companies vie for dominance in this area, we can expect to see innovation and advancements that directly benefit users. Looking ahead, the hardware landscape will be pivotal in determining how effectively AI technologies are delivered and experienced by consumers in everyday applications. The global AI market is experiencing significant fluctuations, reflecting a trend that extends far beyond the United States. Recent analysis reveals that Korean stocks and European tech sectors are notably reacting to shifts in AI investment sentiment. This phenomenon underscores the increasing interconnectedness of global markets, where supply chains, component manufacturers, and software platforms are all intertwined within the same narrative. As companies leverage AI technologies, the repercussions are felt across various industries, influencing everything from production costs to innovation timelines. For consumers, these market fluctuations can lead to alterations in the prices and availability of electronic devices, potentially affecting purchasing decisions. Additionally, as companies adapt to these dynamics, the range of product offerings may shift, introducing new technologies or phasing out older ones. Looking ahead, it will be crucial to observe how these global market trends evolve and influence the competitive landscape of technology as businesses strive to capitalize on the burgeoning opportunities presented by artificial intelligence. As the AI landscape continues to evolve, startups within this sector are facing pressure to adopt discipline and differentiation in their approaches. Recent discussions around the 10 commandments for AI startups highlight a maturation phase in the AI ecosystem. Founders are being encouraged to focus on creating defensible products rather than relying on generic models. This transition is significant because it marks a departure from the initial phase of easy funding and rapid expansion. For consumers, this shift means that we can expect fewer vague AI demonstrations and more targeted applications embedded in everyday tasks. As companies refine their offerings, we may see AI technologies becoming integral to search, productivity tools, and customer support systems. This maturation could lead to a more robust and reliable AI market that prioritizes real-world utility. As we look ahead, it will be interesting to see how these startups navigate their growth in a more competitive environment. Smart glasses are re-emerging as a serious category in consumer technology, with recent innovations from companies like Innovega that aim to enhance wearable displays. This resurgence reflects a growing demand for devices that transcend mere novelty, offering practical applications in everyday life. Historically, smart glasses faced skepticism due to their bulky designs and social stigma, but advancements in technology are paving the way for sleeker, more appealing models. The challenge for manufacturers remains to address two critical issues: social acceptability and practical value. For consumers, the successful development of comfortable and affordable smart glasses could revolutionize how we interact with information, improving accessibility for those with disabilities and transforming navigation experiences. Furthermore, hands-free augmentation can enhance productivity in various settings, from workplaces to educational environments. As the market evolves, companies will likely prioritize seamless integration into daily routines, ensuring that these devices provide tangible benefits. Looking ahead, the reception of smart glasses by consumers will significantly influence their trajectory, potentially establishing them as essential tools in the tech landscape. Despite a broader downturn in tech sentiment, the gaming and digital entertainment sectors have shown surprising resilience. Recent reports indicate that interest remains high in online consumer entertainment platforms, particularly in stocks related to online casinos, which have managed to attract attention even as other tech sectors falter. This trend suggests that monetized consumer applications can still draw investor capital, particularly if they demonstrate stable user spending patterns. For consumers, this resilience often translates into enhanced experiences, including more promotions and personalized content tailored to individual preferences. As gaming companies continue to innovate and engage users through cutting-edge technology and immersive experiences, we can expect an increase in regulatory discussions surrounding digital gambling and user engagement strategies. This dynamic environment presents both opportunities and challenges as regulators strive to balance consumer protection with industry growth. Looking ahead, the gaming sector's adaptability will be crucial in navigating these complexities, and companies that prioritize responsible gaming will likely emerge as leaders in this evolving landscape. In an unexpected twist, Raspberry Pi has emerged as a standout performer in the tech market, with demand surging in recent months. Reports indicate that the appetite for low-cost computing solutions remains remarkably strong, driven by a diverse user base that includes educators, students, and hobbyists. This trend underscores a growing reliance on affordable developer hardware, particularly in educational settings, where budget constraints are prevalent. The impressive performance of Raspberry Pi not only highlights the enduring relevance of budget-friendly technologies, but also demonstrates a shift towards democratizing access to computing resources. For consumers, this surge could lead to improved availability and a richer ecosystem surrounding Raspberry Pi products, including a wider array of accessories, kits, and enhanced software support. As schools and individuals increasingly seek cost-effective tools for learning and development, Raspberry Pi's success illustrates the critical role of accessibility in technology. Looking ahead, this trend may catalyze greater innovation in low-cost computing solutions, prompting other companies to explore similar markets and ultimately fostering a more inclusive technological landscape. The future may see an expansion of initiatives aimed at bridging the digital divide. Recent market trends indicate a significant shift in how tech equities are being valued. Investors are increasingly focusing on profitability rather than just growth projections. This change comes in the wake of rising interest rates and economic uncertainty, which have led many to reassess the sustainability of tech companies that have previously thrived on ambitious growth narratives. The Stoxx 600 index, along with several technology stocks, has reacted sharply to broader risk sentiment, signaling a potential reevaluation of the tech sector. This shift suggests that investors are moving away from companies that solely rely on the narrative of AI growth potential. Instead, they are gravitating toward firms that demonstrate clear earnings power. While consumers may not feel the immediate impact of this change, it can have cascading effects throughout the industry. A focus on profitability could influence hiring practices, pricing strategies, and the speed at which new products are rolled out. Additionally, this could lead to a more sustainable tech ecosystem where companies are forced to deliver real value to consumers. As we look ahead, it will be crucial to monitor how this repricing affects innovation and product development in the tech industry, especially as firms adapt to a more profit-oriented landscape. The excitement surrounding artificial intelligence appears to be waning, at least in the short term. Recent market analysis indicates that investor enthusiasm for AI stocks has begun to soften. As European benchmarks turned negative, it became clear that investors are becoming more selective about which companies can effectively monetize AI technologies. This change in sentiment comes after a period of rapid growth and hype, where many firms rushed to integrate AI into their operations. Now investors are scrutinizing financial fundamentals and real-world applications more closely. This shift doesn't mean that AI as a technology is losing its potential. Instead, it highlights a critical evaluation of companies based on their ability to turn AI innovations into tangible revenue rather than just impressive headlines. For consumers, this change can mean that while AI features may still be introduced, companies might start to slow down on launching expensive experimental products. They will likely focus more on solidifying monetization strategies to ensure profitability. This evolving landscape suggests that consumers may see a more refined approach to AI technologies in the near future, with an emphasis on practical applications that deliver real value. As we look ahead, companies that successfully navigate this transition will likely emerge as leaders in a more mature AI market. Thank you for watching. Which story surprised you the most? Let us know in the comments below, and don't forget to like and subscribe for more updates.